Good morning all, hope you had a nice weekend. I haven't really checked the news yet, so I'm not sure what's happening, but it looks like we had a little bit of a relief in risk. So like I said on yesterday's COP video, Blinken from the United States, Secretary Blinken, was saying there's no outside parties involved in the Gaza-Israel conflict. So if there was, then obviously it'd be a big issue because there could be a spillover. Other countries could get involved, so it looks like it's being contained. Because of that, we might be a little bit risk on, so be careful. We are very low, and that's out of 100. So normally you'd buy when this is buy indices when this is low, pendant this remains green. But I would still be wary because we've still got this slight war going on in Israel, and of course Ukraine and Russia, of course, as well. So be careful if you're looking to buy the dips, but this would be a normal scenario where we're looking to buy pendant this is low, as long as this remains green. Okay, scroll down a bit, we can see the indices in the US are green, but France 40 is red, and there has been some stuff going on in France as well, so that sort of mirrors that, the geopolitics there. So just be careful. Obviously gold does say buy, but what's happened to gold is that we saw an exodus of short positions. It's basically just run up to take so many stops, and it basically hounded those bears. So be careful if it does say sell or buy. You need to do your own analysis. It only says buy because we're buy at the big picture, and the shifting across time is indicated buy, but not necessarily now. Right? You need to do your own analysis. The sentiment bias is buy, but you don't want to look at your technicals, right? And you probably wouldn't want to be buying at the top of gold after a 3% move. It just makes sense. QDB scores, and we can filter that. So EG at the top. So we're red. Oh, we're not red. We're just about green. So it could be a good long, but you know what EG is like. It can be a bit of a pain. A Euro Swiss at the bottom. However, we're positive, so you could theoretically look for sells, but we're so extreme on those sentiments there, it's bonkers. Just be careful. And gold's down here because we've got no data. Alright, so that's that. I'll show you the average bubbles. New Zealand dollar over there, and the USD's over here. If the dollar comes up here, it's going to be a strong sell, okay? And the Kiwi and the Aussie come down there, that'll be a strong buy. But currently got a lot of mixed picture with bubbles, and that's that. So we'll show you the indices in gold and bring that across. Double click. Gold is making a sell, so we can map a box here, 1920 to 1914. 1914. So we've got a resistance box because it looks like they've gone long, but it's less short because there were so many people selling this market. I'll be very, very surprised to see them going long up here. I think this is them exiting the casino through stops. It's absolutely horrible. So where did they start selling? Yeah, down here, 1821. So we had to buy here. We had a sell here, but then you would have probably tried it. You would have got out there. Wouldn't have been too painful. It's like a $11 stop loss, and then you would have got the buy signal, and so your stop loss is there. You'd let it run. You would have got a really good reward, and we made a sell, which makes sense, and then we made a buy, and this was the humongous pump that we had. So this is a case of knowing where your stop is. That's why I always say in my videos, know your exits. Okay, it's so important. If you didn't know your exit, that could have blown you up. On a micro lot, that would have done a horrible amount of damage. If you had a normal size, that would have been catastrophic. S&P, and so we're sideways a little bit, so we can't really comment on direction there. So be careful with the S&P. US 30, they're going slightly long, ever so slightly long. Oh, yeah, we nearly had the crossover there, but we haven't got it now. So we have to be careful there. And then DAX. But I can't stipulate how, I can't state how important it is to have those stops, because gold is a prime example of people blowing up because they didn't know where to exit. You know, you've got to know your exit. And it's horrible getting stopped out. It is. I know what it's like, but you need to know. You need to know your risk management. Otherwise, you'll just lose all your money. Making a buy. They're selling it. So this wick is going to be induced in short positions, and then we're going to see a good old pump. Right. So be careful there. But it's looking promising for higher. And that's covered gold, US 30, US 500, and DAX. And we'll look at the robot. And we'll double click and so you can see that. And so basically we had some risk on trades, and fortunately we didn't go risk off, and we're still very early days, so I'm not saying that we're going to have a risk on day to day. The sentiment's indicating we might, but we'd want to be checking your this. You want that to get higher. Above 50 we're sort of technically risk on. So we had a pretty horrible week. We had about 1600 last week, so we've had a £50 loss, so it's quite significant when we compare. You know, we're just talking about micro lots, so be careful. I'm going to do a video on the bubbles now, in case there's any questions about how they're calculated, because I've had some questions about them, and it's a very technical video, so you can look at that video if you want. It's up to you, but I wish you a good day, and I'll speak to you guys soon.